Hello. Welcome back to the Trading Triangle. It's once again me and Kaye on this fine Sunday. How are you doing, Kaye?
I'm doing great, man. It's pretty sunny out here. It's getting warm, and it's a great Sunday.
Yep, spring has definitely sprung, especially in England as well, which is good to see. Obviously, very eventful market last week, so I can't wait to get into that. Very volatile, very jumpy, etc. But obviously, just before we do that, obviously a disclaimer: me and Kaye are not financial advisors. We just like looking at charts, giving our perspectives, and it's just what we love to do. So yeah, we're not financial advisors, of course. Massive thank you to Wolf as well for letting us use the platform. We really appreciate it. And finally, let me get the tab up. Put your tickers in the comments. We will get to that a little bit later on. We've got obviously the market to cover, especially from last week, so it might take a little bit longer on that. And of course, we've got our picks of the week, and then we'll get to the audience requests. So keep them coming in the comments, and we'll get to them. Should we dive into the slideshow, okay?
Let's do this.
Plenty to talk about, isn't there?
Oh my goodness.
Plenty. I mean, what a week. I mean, how did you find last week, just while we're here?
I only have one word for it: exhausting. That's
exhausting.
I would say that it's from last couple of weeks. I think the trading has become very exhausting, and it has become a true trader's market.
It really has, and we'll see that in the charts a little bit later on. But first, of course, we've got a little bit of a map here, and we've got lots of green and also lots of red as well in the top right-hand corner. So let's just jump off a couple of names. Microsoft, Google, Meta, all up around 6 to 7%. Apple only 2% up, but they might be getting a little bit more of a kick tomorrow with the news that we've had over the weekend. And we've got NVDA and Amazon both over 10%. Tesla actually down on the week. So yeah, we'll see what happens with them this week. We'll have a little bit of a chat about them later on because we've got them in the lineup for the charts. I think Kaye's got some thoughts on them, that's for sure. But yeah, anything jump off on this page for you, Kaye?
No, I think it's been a roller coaster, and we get so many comments here, and it's been a casino. Yeah, absolutely, it's a casino, and I think you would find yourself super exhausted, and you will probably be behind the news by the time you are operating on one news. Some other news has already dropped in, and you're already late on that. So I think this is becoming like a joke and exhausting for a lot of people. So if it's becoming for us, imagine people who are watching this minute by minute or seconds by seconds, and for them, how exhausting this would be. I think we got a comment on are we gonna have a good Monday? I think in my opinion, and Sean, you tell me what your opinion is. I think at this point in time, assuming it's going to be good or bad depends on what White House thinks and who is going to open his mouth or her mouth at what point during the day, and that is going to decide. So as an economy, as a capital market, we have become subject to a statement from the White House that comes out, and it completely throws off. So an example, and funny thing, Sean, you were probably not aware that today Howard Lutnick, our Commerce Secretary, came out on the news channel and said, hey, we are going to have a separate set of tariffs on semiconductors. Yesterday, on Saturday, we apparently had iPhone exempt and semiconductors exempt. So at this point in time, I'm like, I don't even know. It's like you just open the stock chart on the day when the market is open, follow the trend, watch the news tickers, and just trade, I guess.
Yeah, I think I'll speak a little bit about my trading style at the moment. Obviously, trading, I like to let my winners run, but in this market, you just cannot do that because it's just so choppy throughout the day, even throughout the futures market. It's insane. Just the volatility we're getting and we'll get into the charts in a second about that. But generally, yeah, just taking kind of half positions and almost kind of half target prices, and keeping the stop losses a little bit bigger in terms of, for my trading at least. So it's a tricky trading environment, but you can navigate it. And I've had a green week personally myself, but yeah, it's a tough week for people, I think. But I think obviously if we have a good Monday, obviously we'll see. Tonight, obviously the futures will open. I think we'll probably see a bit of green, and then maybe just kind of dribble down overnight with all the kind of anticipation and perhaps a bit of nervousness heading into the actual opening bell. But yeah, it's definitely been a casino. Thank you for everyone joining. Obviously, keep the comments coming. We'll try and keep up with them. We'll try and get all of them coming. We've got another one here from Ramat. What about market on Monday, Amazon and Apple? I think that's probably related to the news that is coming out there. What else have we got here? The House always wins in this case. White House folks. Yeah, I mean, White House
White House will always
Yeah,
win. Absolutely.
course.
I think if you think that you are going to outsmart White House, I think it's we cannot outsmart them. We are retail investors. The news is always delayed for us. They have already made the money. That's always happens. But we can do whatever we can, right? Uh,
Exactly right. We'll jump back into the slideshow here. We've got a couple more comments coming in, but
yeah, there's somebody asked, are these numbers from? Let me see, what was the comment here?
this one's here. Are
Yeah,
those
yeah,
percentages now or Friday market close? So it's for the week, so Monday to Friday. Is that right,
yeah,
Kay?
yeah. Absolutely.
Perfect. And hi to Hon. Hope you're doing well. Yeah, we'll jump into the next slide. We've got so basically a fear and greed index is still sitting at 13. Last week it was 8. Oh no, sorry, last week it was 3. So we've gone up 10 points here, and you can just see the numbers on the left side here. You've got VIX sitting at 37, so it's kind of come down from that 45, 50 area. Obviously, SPY up almost 10% on the week, and QQQ up 11%. We've got another very exciting slide next, diving into a little bit of history, which Kaye's going to dive into, but I'll just run through these numbers quickly. The US 10 years up 13%, 4.49. Kaye, you got any words on that? Because that's
Yes.
really
So apparently everybody on FinTwit now is becoming a treasury and bond expert. So I thought, why not we also show over here what the 10-year treasury rate looks like. So bottom line is that you want to keep the treasury rate low so that you don't have to pay as much interest to the people who hold your treasuries. That's basically the sense here. So the more it gets closer to the 5%, it starts to get a little bit what was Trump said? He said everybody's starting to get yippy, right? Yippy or whatever that he said. So you don't want to get yippy or yippy. That's why I want to keep it lower. So I think we'll start tracking the 10-year treasury because I think it's becoming a little bit more important in this market. Key event I think for us is I mean at this point I'll just watch White House, right? If you can track White House, that will be the key event for the week. And yeah, Good Friday. So the market this will be a shorter week this week.
Yeah, certainly will. So it's going to be an interesting one for 4 days. All that volatility packed into 1 week is going to be very, very interesting for sure. Should we move on to the next slide, Kay? And I'll hand it over to you, of course, because you're the one that want to bring this one up. It's an interesting slide, so pay attention, people.
All right. So this slide, basically, we're talking about the largest single day gain in S&P 500. So you might have seen when we got the news, we had this massive jump of 8-9% on S&P 500. Now the chart on the left hand side, kind of you can see when those big jumps have happened. And on the right hand side, I just put together a table, and basically, if you notice, anything that you take out of this slide is basically this. All these single high level jumps that you have seen across those years have happened in a pretty bad market environment. Whether you look at 2008, whether you look at 2020, whether you look at 2009. So 8 and 9 was more, 7, 8, 9 was more financial crisis. 2020 was the COVID time. 87, I'm not that familiar, but we did have the Black Monday on October 19th, the largest single day crash in US history. So every time you have those massive crashes, you generally to see a big rebound. So what is the takeaway from this slide? The takeaway from this slide is if you have S&P 500 and Nasdaq in your portfolio, which I think everybody should, these are the big drop days that we should be definitely adding to. I know it gets scary, but you have to keep a cool head and add as much as you can on those big drop days. So when S&P 500 is having a 15-20% pullback, that is the opportunity you need to be adding it. Now again, you could, if you have, let's say, $5,000 to invest, you might not want to deploy all your cash because you can see further drops. Like for example, we had the first and second was October 13th, you had the biggest jump, 11.6%. And then October 28th, you had another jump. So let's say you might want to spread that out for a couple of weeks. And then November 13th and November 14th. So number 1, number 2, number 9, and number 10. Look at that, those dates all close by. Like within a span of a month, you had 4 days of massive jumps in S&P 500. So that's what I wanted you guys to show you guys, that these jumps are common, but only in a very, very volatile market. And data tends to show us here.
And you can see on the screen as well, October 13th, the closing level was actually 1,000. So it jumped up 11% on that day, but it actually went down over the next couple of weeks, down to 940. So that's almost 10%, and then had another big jump. So it's actually gone down another 10% after that big jump. So it just goes to show that obviously Kaye's point around volatility and how uncertain it can be. Of course, yes, adding to it over the long term, I think is a smart decision. But of course, it's easier said than done, isn't it, Kaye? It's very easy. It's very easy to get emotional in this market. I mean, we all get. I mean, we're not robots. We're emotional over the market as well. But sometimes it's better just to sit out of it and just kind of take a look every couple of weeks and maybe think, oh, okay, is it actually a good level? Maybe I should put some money in here now. And that's what I've been doing personally, bits here and there, and to companies that I like and companies that I think will do well in the future. But yeah, no, it's an interesting start. I'm glad you brought this one up.
Yeah, because in a good market, you would remember we would generally see a 2% day, and everything is green. And you will have massive runs in all those stocks. Now, stock can drop 10, 20, 30, 40, 50, even 80, 90%. S&P 500 dropping 20%, that's massive for the economy. So, take advantage. But also you can see that this is normally doesn't happen in a good environment. It happens in a pretty volatile and environment. And by the way, you're talking about recession and all that stuff. You would actually know recession. You already passed the recession, because after the fact, they will not be calling out recession. I mean, you will have one side will calling out recession, the other side will not call out recession. It will be a past story. So you might even be in recession. Who knows? They keep changing the goalpost here.
Yeah, it's always the case, isn't it? We'll move on to the next slide now, and onto a different topic. We've got earnings as well. This obviously, we said we were off Friday, no market, so obviously that's why that's blank. But obviously, earnings season's kicking off with the banks on Friday. Did pretty well, for what I could see overall. Obviously, we've got Goldman Sachs on Monday morning as well, Bank of America, and all the other banks kind of reporting. The big ones here are going to be ASML and TSMC, who are going to be giving interesting guidance, to say the least. And of course, Netflix as well, which is a big player on Thursday night, see if they can continue their success story, their revival story the last few years, sorry. But yeah, I mean, anything you want to speak to here? I imagine.
I think pretty much we covered everything. Netflix is the only stock that I think should not be impacted by tariff, but who knows? I mean, they would be from an operation standpoint to run all those data centers and everything. So they might be impacted because of semiconductor expansion and all that. But yeah,
it's going to be the most interesting earnings seasons I've been involved in, and I've been in the market 4 or 5 years now.
Yeah.
So it's going to be very interesting to see what people say about their futures, not just these companies you see on the screen today, but over the next month or two. Yeah, it'll be interesting. Right, let's move on to the first chart of the day, and it's the SPY chart. I've zoomed out a touch just on the daily, just to show you how volatile the market is. I mean, everyone kind of knows already, but the actual volume itself is absolutely huge, isn't it, Kaye? Absolutely massive.
This is crazy.
Because even the volume that we had in kind of through March and April, even when Trump was kind of kicking off and saying things on X, it's almost triple that on some of these days that we've had in the last week. So just a big message around kind of being careful out there, especially when you're trading. It's not a swing trading market. I'm not swing trading at the moment personally. I'm long-term investing, and I'm day trading as well. I'm not saying it's a good time to day trade, but it is, in my opinion. But we'll see from there. But looking at the chart, there's not really much to say, to be honest. We're below the 200 moving average, which is obviously flowing through the screen there. Big rejection off of here a few weeks ago. What I'd be looking for the upside is to break this kind of trend line, which is more prominent, which you'll see on the QQQ chart in a second. But of course, we could just keep following this down. What are your thoughts?
No, I think it's pretty straightforward, right? I mean, we're just waiting on new news events. It's a news event market. We'll get a new event. We'll probably see a spike or a decrease, and you basically play it that way. It's purely a day traders market, and even scalpers. It's not, as you said, it's not. You can't swing trade even 2 days. Something might just pop up,
Exactly. Yeah, swing trades market is RIP at the moment, at least. We'll see what happens if we do break these large technical kind of trend lines and stuff. It'd be interesting to see if they can actually start a run. But in this case, it's not really. It's not really the case. We've got an interesting comment here from Ken. It's a Trump event market. It certainly is. It's Trump's market, even though he's not looking at it at all, he says. But yeah, we'll see. Right, let's move on to the Qs. Much the same, but it's a little bit tighter around this kind of trend line, as I was mentioning in the SPY. Again, elevated volume, which you can't quite see because we're in the way, but you can take my word for it. The volume is about 2 or 3 times, which is to be expected, which we mentioned on the SPY chart. But yeah, I think all eyes on kind of breaking this trend line upwards. But of course, we can always snap straight back down with the market the way it is at the moment. I would like to see a little bit of stability. Wouldn't you, Kaye?
I don't know if you're going to get any stability because now you will have earning season, which is actually next week. We kick off the earning season for all the big tech. I don't know if they are going to give you any guidance. So if they're not going to give you any guidance, then it becomes even more difficult for the market to go up. That's my take.
It's going to be an interesting one. Yeah, we'll move on from there. Then we go on to my pick of the week, which is actually Google. I say pick of the week. I mean, anything could happen during the space of a week, but I like this one purely if we do get a bit of a push on Monday morning. I just got a very simple kind of 10% play out here. I haven't got anything in this. I'm not in this trade, and I may not get in this trade depending on what happens overnight tonight. I mean, anything can happen. We spoke about it earlier. But I like the way the chart is setting up. There's lots of strength behind, obviously, Google at the moment. So we've got obviously the lows set here back kind of early April, and then successive higher lows kind of going into this major trend line. We've bounced off of it a few times in the last few days, so Wednesday, Thursday, Friday. But we're closing quite strong on the Friday. So perhaps if we do get a bit of a push through, then maybe we can take out from this volume and go straight back up to the 200 moving average. I'm not saying this will happen in a day. It could happen in a couple of weeks, but it's a potential trade there for myself personally, and ultimately I would probably keep some on the table and go to 204, but that's very, very ambitious at this rate. Obviously with the market the way it is, it's a bit hopeful to go straight to 204, but you never know. That's my thoughts currently on Google. Do you have any different thoughts on Google?
I don't have any different thoughts. If we see a rejection and a decline, I would probably be adding to my portfolio. But again, I don't see we can get to all-time highs in this environment. I see no reason why you would get that.
Of course, yeah, no, that's a testament to what I just said there. I think if we do get a head down lower, I've got 140 here, which is a nice kind of point, which I've had for a few weeks. Didn't quite reach there, so I didn't quite make that kind of long-term add at that point. But yeah, we're looking at 140 for me personally. Kaye, you still there? I don't know.
Yeah, I'm here. Sorry. It was just something popped up. I just wanted to quickly check.
I thought I was going to be riding solo for a second now.
No, that's...
but yeah, Google's my pick for the week. Yeah, nothing else to say to this one. We'll move on.
No.
Okay, awesome. So you can get me on Twitter, of course, obviously Sean Trades _ and YouTube as well, and the TTR, which is my trading community, actually running probably the best kind of promotion I've done so far, which is 50% off all plans with this code of spring_50. All you have to do is head over to my X profile and it's basically there in front of you. So go ahead and check that one out. And with that, I'll hand you over to Kaye's pick of the week, which I believe is NVIDIA.
Yes. So the reason was I chose this one was when we heard on Saturday we would see a respite. Now, again, we could still see the stock rally because for now, what tends to happen is generally inherently the stock market is bullish and forward looking. So yes, you could see weakness in the short term. When I say short term now, it's talking about few hours in the beginning. But as long as Lutnick can say anything he wants on the TV, but I think what comes out of Trump's mouth is more important. So if Trump goes back, flip-flops again next week on whether we are going to do a tariff on semiconductors or not, we could see actually NVIDIA gaining more strength and momentum. But basically, if you look at it, right around the earnings time frame is when we see this wedge actually closing in on NVIDIA. So we could see either, based on their guidance, we could see a breakout or a breakdown at this point in time. So it's getting narrower and narrower, but still we are making lower highs. I don't expect NVIDIA to go back to its all-time high anytime soon, but there could be an opportunity to day trade. And if you are going to run options on this one, I think in this market, maybe a delta of 10 or 15, maybe that might be the right area you might want to sell options on. And you should definitely look into maybe 30 days to 60 days out. Be very conservative when you sell options, if you are selling options.
Yeah, interesting. And from a shares point of view, it's a tricky chart to trade because we've said quite a few times actually that NVIDIA has been a bit of no man's land, and it kind of feels a bit of a same now, even at this level. Perhaps down here, 85 was a bit of a steal. I think I had my buy level about 90, I think, for the long-term portfolio, which now looks great, but of course it could all change. But yeah, you're talking about earnings, which is actually quite far away, isn't it? It's the
it's
28th of March, June.
Yeah, let me tell you the exact date for earnings. It's 5/28, so almost end of May. So you got what, 6 weeks.
Yeah, it's quite a long time.
Yeah.
Looking back at the chart, though, you've got RSI sitting around 50, which is really quite nice, kind of right in the middle there. So it's kind of almost gearing up for maybe another move, whether it be upwards or downwards, but we're not sure. But it looks like it might be, given the candles we've had. So Thursday's candle was really nice hammer candle, but of course, analyzing candles in this market environment is pretty tricky. But yeah, it's all worth it, all worth a look, isn't it? I like
Yeah,
NVIDIA.
because so generally, if you think about it, if you look at any chart, right, you will have a technical analysis. You will say, okay, this is how the trend is playing, and then of course that trend is also impacted by the company news, company events, right? Maybe the earning is coming out, maybe they are launching a new product or services, and then you go one level above at the macro level, how the industry is performing, and then you go one level above at how the economy is performing, and all those things, they basically drive the stock price. And the problem is, if there is so much volatility at the very top, the layers below will have a lot of volatility as well, and it's very difficult to drive or anticipate where the pricing will go. And let's say honest, if they put a tariff, let's say 20% tariff in 2 months time, they come out and put on Nvidia, that's going to compress the profit margin. It's going to impact the growth. Will the hyperscalers continue to build out data centers? Will we see a slowdown? So there is a ripple effect that will take a couple months or even quarters to you will be able to see it, unless they flip flop again. Right? That's the problem you're in.
Yeah, exactly. It's a tricky one to navigate for sure. Before we jump into what Kaye's got going on at the moment, make sure you put your tickers in the comments, because once we go through this last slide, and of course that will be what we'll be going into. We've got quite a few coming in now, but just keep them coming into the comments. We plan to keep basically going through the tickers until we have time up. But yeah, Kaye, what have you got going on at the moment?
Well, definitely, if you want to keep track on the latest and greatest on what's going on, as much as I could track, I'll be posting on my X or Twitter, whatever you like to call. YouTube, I have not been able to post a lot lately. Is one of the main reasons is because I don't know what you want me to, what analysis I should be doing, considering the market is flip flopping so much. So I'm actually not putting any trades out yet. I am taking trades, but those are a little bit riskier depending on risk profile. So maybe as the market settles down, I might come up with a couple trade ideas. One I'm particularly looking for is SMCI that I might share as well in the next week or so. And then on, if pretty much the trade analysis from the video gets a written version on Substack, if you like written version.
Awesome. Plenty coming then. Plenty coming.
Okay.
All right.
So
let's jump into the charts. So stick that up on the screen so people can get their tickers in to the comments.
Yep.
And I'll get the charts ready. Who have we got first, okay?
First one is Hood.
Robinhood. Well, I mean, what a week Robinhood has had. I think it's been up 45% or something like that. I was looking a bit earlier. And we will just, I'm just trying to get the slide up. So here we go. There we go. So that's Robinhood. This is actually a bit of analysis I did earlier. I say analysis, I just drew a line saying how much it went up. So obviously it went down all the way down to kind of $30-ish, and obviously finished a week right at 43.68, which is 45% swing. Absolutely incredible for this stock. So people who bought down here, maybe even for the first time, they must be feeling pretty good about themselves right now.
Yeah.
I mean, Hood themselves, I mean, they must be benefiting from all of this, right?
I think absolutely. The more volatility it is, the more you will see retail investors also participating. The more retail participate, and also let's be honest, Robinhood has improved as a platform. Maybe less 3 years back, right? And they have more services and products that they keep launching on. It is really, and let's also remember that Robinhood was the primary driver of forcing other exchanges to make trades free. Before, we used to pay, I don't know, $2, $3 per trade when you would buy a stock or sell a stock. So Robinhood basically got that, in the market. So they are basically have been a driving force. So I mean, I'm bullish Robinhood definitely long term. It's not my primary play though. I don't trade Robinhood as often. I have other tickers I play often.
Maybe we should be. So it looks like even now, even after that massive run we've had, all the volatility, might just be poking up this this trend line, which I was looking at as you were talking there. Good Friday, like obviously many other stocks had, but can it continue that run? It may well do, because people might be looking in 6 to 9 months' time and thinking actually Robinhood must be benefiting from all of this market volatility, and they can thank Trump for that for sure. But yeah, should we move on to the next one?
Yeah, next is Tesla.
So Tesla's an interesting one. I've got it currently in between. I don't know what this is. Oh, that must be the volume gap. So I've got a bit of a volume gap kind of proceeding out here. But generally, I've kind of noticed a bit of a wedge. We popped down below it on Monday, Tuesday, Wednesday of last week. But we've come back up into it, of course. This is what I've been looking at. If we can get a clean break out of it, with the following day being also whatever color that might be. So, for example, I imagine that probably didn't make sense, but if we get a break out of it here, I would like to see another candle finish above it. And then, of course, that would be when I enter the trade, from a hypothetical standpoint. And then, obviously, going back up to the kind of volume profile up here, which would be about 330. I don't know why all my lines are red. So let's change that. I know you have some thoughts on Tesla. What are your thoughts?
Yeah. So first of all, I think I posted this maybe on Thursday or Friday, I forget, on my Twitter feed. So if you zoom out a little bit, Tesla has been range bound between 215 and 265. So this is a pretty ideal position for running a wheel strategy. But again, you have to have a very conservative approach to this, because the swings in Tesla are much higher, and it's there. The number of swings you're having every single week has also increased. Tesla was always a volatile stock. Your IVs were always high, premiums were always high, but now you're just having sometimes double digit moves every single day.
Yeah.
So that's the problem with running a wheel strategy in this environment. But right now it's still range bound. It has been range bound since, I would say, for 3.7, and we are on 4.13. So it is range bound between 215 and 265. So if you run options, if you sell options, that's something that you can look into, and most of the volume shelf is actually sitting in that range.
Definitely an interesting one. I'm sure lots of people will be trading this, because lots of people, I know, day trade Tesla. And obviously, for that thing you said with the kind of 10% swings per day, it can be very, very beneficial for the day traders. It can also not be. It can also destroy accounts. So you just need to be careful with your risk management and kind of execution, because I think execution is key in a market like this. It's very easy to kind of jump in and ride a trade, but it can come back on you pretty fast if you don't follow your rules. Yeah. Have we covered Tesla there?
Yep. Next is XLF.
This is a financial ETF, I believe.
Absolutely.
Again, another section of volatility. Maybe we can go back out onto the weekly chart, because I think it'll look a bit more impactful. So obviously we've got a big drop down the week before. Not too sure what that was related to. Maybe just market madness. And then obviously a bit of a push up on last week as well, but not quite to the kind of level of about 48.69 now from the close of the week before, or the open of the week before, should I say. But yeah, big volume shelf here, which we did have a bit of a bounce off of. Looking forward, though, it's pretty tricky. I mean, we had some good results from the banks. I didn't see any of the calls. I don't know what they mentioned throughout the calls and what they see for the future. Perhaps I should dig into that a touch. We've got a few more banks reporting this week, haven't we, Kaye?
Yeah, Goldman is reporting on Monday, and I think there are a couple other small ones will continue to report throughout the earnings season. I think 41.77 looks like it's a good place, because that was a resistance before, and then right below it, around the $39-$40 is where your major volume shelves sit. So if you want to add more, that would probably be a good place to add more to your position. That could also be a way to maybe even run some credit call credit spreads here. I mean, might not be a bad idea because it was an all-time high on 3.7 on the weekly chart, and now we are back to what 45 or something. So we are down like what 10%. Let me see how much we are down.
I don't think I'd be rushing to buy any banks though, personally.
Yeah, we're down 10%. So this is more like the ETF, right? So I mean, I think the $40 is a good spot to add to your position if you already have.
Yes, I've just drawn a zone there, much similar to your words, kind of 42 to 40.
Yeah.
Just because that's where that volume shelf sits. Of course, we've got some previous support resistance as well. But I think the important thing that we can see on here, at least for the technical point of view, is we've got a low set here on 15th of April. Let me get my trusty highlighter out, which I can't click the button. There we go. And we've got a low set here, then another higher low, another higher low. We just set that higher low here. So it's still trending in the right direction. The financials are still going in the right direction generally. But yeah, it'll be interesting to see what other earnings reports come out this week. I think we've got Amex as well, kind of reporting. So that'd be interesting to see if people are still spending on their credit cards, which I'm sure they are, for sure. But yeah, I think that's I think we covered financials well there.
I think one news that you might want to keep an eye on is if the trade war continues to escalate. We also heard from the European Union, that they are looking at options to get away from Visa, MasterCard, Amex, and have their own payment system. So that is definitely going to impact companies like Visa, American Express, banks. So it is very important that if you are into the financial sector, you also keep an eye on the news like that. That did not make the headlines, but that was definitely part of the announcement from Europe.
I'm sure people that were involved in the financial markets, well, financial assets, should we say, are definitely clued up on what's going on within that industry for sure.
Yeah.
Well, should we move on?
Next up is yours, Amazon.
Amazon, yes, this is my stock for last week, and it went pretty well, but only because of generally luck, to be honest with you, because obviously the market went the way it did. It could have gone any direction, but of course we got that bounce out of the zone, which I mentioned, which was nice to see. It was nice to add on the long-term portfolio, but of course we've still got a lot of work to do. The 200 moving average is the red line flowing through the screen, and we've got the green line as well, which is also obviously the $200 level, which is a psychological level. So getting back above that would be key for this stock at the moment. But I mean, it's not that far away, really. It's probably just under 10%, so it's not too bad. And we've got that. Sorry, carry on.
You won again, because Amazon 12.39, Apple had 11.38.
This is becoming quite easy. This, I think I've done 5-0 or something.
I know.
So those that I don't follow, if you're new to this, me and Kaye, we have a pick of the week. Obviously, we went through them earlier on the stream, and we're kind of taking a little bit of a backside tally behind closed doors, and I'm currently up 5-0, which is pretty good. We'll see what happens next week. Obviously, NVIDIA and what was my pick this week? Google. So we'll see who. I mean, you've definitely got volatility on your side. The percentages are definitely on your side. But can it be done? Can Kaye get a notch on?
I don't know. Can I open my score here? At least once.
But going back to the Amazon chart, then obviously we do have this trend line coming down, which we spoke about with this SPY and the QQQ. If we can get through that, then maybe a quick jump to 200 might be the play, even on day trading side of things. To be honest with you, but obviously be careful when you're out there.
So what's your thoughts on the tariff? Because the exemption is not for Amazon, right? Amazon still has to. The impact on tariff is still there for Amazon.
When perhaps the volatility won't be there as much as kind of Apple and NVIDIA, of course. Maybe it might be a bit of a, dare I say, a safer play because of the amount of percentages it won't move, if that makes sense. So it will move slower. Right. But it will still follow the market. So if Amazon and NVIDIA push up the market tomorrow night, or tomorrow morning, should I say, then Amazon will follow.
So if you think about it, right? So if the tariff stays in place, assuming it, right? This is a tariff stays in place, which means that it is going to impact the revenue of the Amazon retail side of the shop, right? Because majority of the products come from China.
Yeah.
And at the bare minimum, while all the other countries are negotiating, I think you still have a floor of 10% or 20% tariff that they haven't removed it, that the floor still remains. So you still have to pay. If you're importing from other countries, you're still paying some 10 or 20% tariff on the existing product. So what we are seeing is that on the retail side, you will still be impacted, um, uh, even though you get relief on the semiconductors and electronics. So I think the key would be on Amazon is watch how the future guidance is, what they say about the future guidance, and look at the retail numbers, because that is definitely going to get impacted, and I'm pretty sure it's already getting impacted.
Yeah, we've got earnings on the 24th of April, so it's a couple of weeks away. So it'll be interesting to see what they say. But they, like you said, I mean, your point is very, very valid. They will be affected by these tariffs, even if they have been delayed or such, and they're still going to be impacted in the future if they're to be stayed or if they're to be increased, perhaps, because Trump is likely to increase them day by day. So we'll see what happens there. But I mean, surely Amazon will be completely fine long term.
Yeah.
It's just how they navigate through this tricky period of the tariff complications, etc. But yeah, just a short trade from there to there is my thoughts. Anyway, let's
Next
move on
is
to the next
Meta.
one. Meta. This one looks the ugliest, I think, out of the Mag 7. Just because of that rejection of the 200 moving average on Wednesday.
Yeah,
Well, technically
26% from its all-time high.
Technically Thursday. There's also a bit of rejection from a trend line, I believe, if my eyes are not deceiving me. Yes, so if you spread that out, we do have a bit of rejection off of that trend line. So perhaps, again, like we mentioned with the SPY, QQQ, Amazon, if we can get through that, then that might be all the market needs, potentially. But yeah, it doesn't look good on the technical side, really. But the way that the market is flowing, it could all change.
Yeah. No, I think at this point in time, if you are a long-term investor in Meta, it is trading below the 200-day. You may want to nibble here and there, right? Because you're definitely below the moving averages, major moving averages. And 540 has been, at least if you zoom out, has been the prior resistance. So you could still find the stock as a floor here. Hard to call floors here nowadays, but definitely an option where you can add to your long-term position. I don't know if I want to trade Meta, especially right around when they're reporting earnings.
It's tricky to add on a long term as well, in my opinion, because we've got the 20 moving average and the 50 moving average on the weekly chart both above and a long way down to the 200 moving average. Not saying that that's the main indicator to use. We've kind of held this trend line so far, so that's probably a slightly bit of good news on the weekly side. Maybe the monthly side, we've got a bit of support. Yeah, so the support there is bounced straight off of the 20 moving average for the monthly. So that's a good sign as well. So it's very mixed feelings, I guess, with Meta. So I guess people who are involved with them more will know more, of course, and they'll probably predict a little bit more in terms of the fundamentals going forward in the next few quarters. But again, I'm interested to see what they say as well on their earnings call. They're not directly impacted too much, are they?
My assumption is not, because their hardware segment is not as big as Apple or other, like, I mean, their Ray-Bans, Oculus might get impacted, but that's not the biggest revenue generation. However, the biggest revenue generation is the advertising part, right? So you might see a hit over there.
But reducing their spending on advertising.
Correct, exactly.
Yeah.
Companies may start spending less on that as well. So something to keep in mind. I think the earnings season will play a key role here. So definitely keep an eye on that.
Nice. What have we got next? Okay.
Sorry, next one is MRK. I don't know what this is. MRK.
Merck and
Oh, it's
Company.
Merck. Oh, I mean, any pharmaceutical, I think you probably are gonna see a drop, I guess, because of tariff announcement, I guess.
Yeah, I don't even know what these. I know you've just said, but I didn't know what they did until you said it. Because I guess it's an American company. But
Yeah, so
generally trending upwards.
company, and every pharmaceutical company is going to get impacted by the tariff. I mean, I am not touching pharmaceutical right now. Definitely want some more clarity on before you even want to trade it. It's trading below its all the moving averages on weekly. It's trading below its all moving averages in daily as well. It's basically on a downtrend, making lower highs.
I mean, from the all-time high, it's
Yeah,
43% down.
yeah,
The only level I can really see is that $70 level, just because there's lots of support there from before, kind of going through 2019 all the way through to 2022.
yeah.
I'll draw a box around it so people can see what I'm talking about more. So we could be heading back down to there, but like you say, tariffs will hit this. But until we get more clarity on that side of things, it's tricky to. Well, I'm definitely not trading it, but in terms of long-term investing it, I probably wouldn't. I wouldn't go that way either.
Exactly. And you may see a pop-up. Let's say, for example, they come out and say, oh, we are not putting any tariff on pharmaceuticals. Boom.
Yeah.
You might have a 10%, 20% day. But then you have to wait for that, right? That's in a month or 2 months, they will come with that announcement. Oh, next up is my favorite stock, Intel.
What's going on with Intel at the moment, okay? Because I don't really look at it too much.
I don't follow Intel anymore. It's a joke of a company nowadays. But hey, it's trading. It's pretty low. It's like what 19. They have kind of found a floor at 1877. Seems like the stock is basically bouncing off of those levels, especially a lot. But the volume has really, like, considering the volume from last, like, you would see pop-ups during earnings season, which makes a lot of sense, and then a couple days the volatility remains. But since the February, the stock has gone like really berserk on the volume side, right? It's just crazy.
Yeah,
I know
this
there are a lot
has
of
been
buy ratings from a lot of analysts here, but let's be honest, Intel is not the company at this point in time that you want to. At least I don't think Intel is the right company to bet, especially with the tariffs on semiconductor popping up. Intel is definitely not going to be the winner here.
It
Not
seems to be
not
a bit range
stock
bound
cannot
as
go up.
well.
By the way, the stock doesn't. I'm not saying the stock cannot go. Stock can still rally 50% from here. Not in the current environment, but it could still rally 50%. But I'm not betting on anytime soon on Intel.
From a technical level, it's interesting because we're kind of range bound between this, like you said, 19 and 25.
Yeah.
So would that be a recipe for your kind of wheel strategy,
Yeah.
perhaps?
You can run wheel strategy on Intel. It just doesn't give you enough premium nowadays. Well, IB is pretty high right now, so yeah, maybe yes, it will work on in your favor. If you're super bullish, then maybe uh, leap options, leap calls, and then maybe you can sell poor man's covered call, buying a. So basically, you sell a leap call out. Sorry, buy a leap call, maybe 365 or maybe 2 years out, and then you keep selling poor man's covered call to lower your cost basis. Maybe you can do that as well. It definitely provides you an opportunity here because it's really at a very low. My question is, can it go lower? I don't know the answer to that.
Definitely can go lower, in my opinion. I mean, the news over the weekend will be interesting to see how it reacts to that. But yeah, no, should we move on?
If it goes like 15-10, maybe that's when like
Yeah.
the asymmetrical, the upside to the downside is just going to be massive. Next one is MSTR. I don't think we cover MSTR that often, but I know it's a very popular.
Yeah, I do the owners calls on my YouTube channel. It's just Michael Saylor just talking about how much he
Okay,
loves Bitcoin.
got it.
That's all it is, really.
So is the stock like literally just driven by the price of Bitcoin, or how does that work?
Oh yeah, 100%.
Okay.
Yeah, I mean they raise cash to buy more Bitcoin. It's an interesting company. A lot of people think it's some sort of Ponzi scheme, at least kind of in the making. But a lot of people love the kind of strategy behind it, and they've actually kind of changed the name to just strategy. So it's no longer MicroStrategy; it's just strategy now. I don't know why it hasn't changed on TradingView, which is interesting. What they would
Yeah,
have
it's
done
not.
that.
It hasn't changed here on any
Yeah.
chart actually. It says strategy. Yeah.
But from a technical point of view, obviously Bitcoin is doing what Bitcoin does. It's just kind of slowly going downwards at the moment. Yeah, I think it's kind of trying to break out of a trend line. Maybe we can look at the Bitcoin chart in a second. Actually, I've got it up here. You can kind of see it tickling away. But yeah, from a trading point of view, obviously we've had that trend line that came back down. We broke through it. We've come back down and retested it. in a kind of a weekly fashion. It's a bit of a long-term fashion. So if you did get in at 240, then congratulations, you're doing very well at the moment. Let's have a look at the daily chart. We'll jump into that because I know people like to chart MicroStrategy because it can be a bit of a technical analysis beast. At least in my experience, I don't trade it too much, but every now and then I do.
Just look at the chart. Look at the bounce from the 200-day moving average. It's held pretty consistently.
Yeah, exactly right, and that's something to be admired, of course. So not every stock trades to technicals that well, and this is one of those that kind of does, which is interesting to see. But if we can get a bit of a breakout of this 20 and the 50, we're kind of coming up to an interesting point here. Maybe we can get a run straight to 330, which from there is about 25-30%. I think. Let's just have a look at that while we're here. Nowhere near 13%. I've got that completely wrong. Yeah, so up to the nearest kind of volume profile up there, I think that would be interesting. And then it's about getting through that most recent high, and then a challenging up here kind of $400 level. This stock can move very, very fast. So if Bitcoin gets a bit of a touch, bit of a move over the weekend, which of course is not so much. Let's have a look.
Also, if you sell options, the IV is in the 80s and 90s, so you definitely get amazing premiums on this one. I see that.
There you go. So Bitcoin, yeah, but as I was saying, it's kind of got this long-term trend line all the way from kind of January of this year. This is the daily chart, and it's kind of really been going along that trend line. So it's kind of just about breaking out now. And I've drawn this. I had a tweet a couple of days ago related to this, which is why I've drawn this. I'm looking for a rejection of the 200 moving average to come back down to its volume profile and then make another move higher. So perhaps MicroStrategy going back to that chart may follow in that fashion. Who knows? We'll see. But yeah, definitely one to look out for if you're a technical trader.
Next up is Shopify. Shopify has been it also has been in a pretty limbo. It used to was trading around the 113 115 mark, and now it's like back in the 80s 90s range. Now it's trading below its 200-day moving average also. It's very interesting, and I think with the tariff situation escalating, I think it also impacts Shopify's core business model, because you have all these small businesses, small medium-sized businesses that get Shopify, open the Shopify stores. Most of them are getting products from China. It's a big impact on their business model, and very interesting. Let me see when they are reporting earnings. They are reporting earnings on 5/13, so it's about 4 weeks from now.
Yeah, so that is this blue line here.
Now, so if you look at it, right, there's a small gap up that was created back in
this one
August of 2024. So and again, this is a if they report earnings and the tariff war continues, I think I wouldn't be surprised that we actually pull back and fill that gap.
It's a big, bold claim, that is, Kaye. Would you be interested at those levels?
Oh, absolutely. Yeah. Well, I made the same bold claim for Apple, and let's say it filled the gap, right?
Yeah, it certainly did. Even I wasn't that bullish on that, but it happened. That's an incredible call.
No, but the key here is the tariff, right? If your business model is that you have small and mid-sized business owners opening the stores, where are they sourcing the product from? They're not sourcing products from United States. Maybe they are, some of them, but majority of them are sourcing from outside the United States. And if you continue to have tariff, they will probably have to slow down or maybe close down their store.
Exactly. 55 is the level that we're looking at for the future.
Yeah.
Look forward
so
to
I think the earnings season is going to be key for these, especially retailers, because the tariff is still there on retailers. They haven't removed the tariff yet. So even if you're sourcing from Vietnam, you're still waiting on a negotiation, a deal to happen. But you still have to pay 20% floor tariff from Bangladesh and Vietnam and other places.
We're going to go through some of these tickers pretty fast. We're kind of taking a little bit of time. So we've got probably
First is
6
Zoom.
or 7 left. So Zoom.
Yeah, I'm not that excited about this particular stock right now. It has been pretty poor performer over the course of, this was more of a COVID name. And the gap down that was created back in 2022 still hasn't been filled. So it's been 3 years now on this stock.
Which one was that? 2022.
2022, yes, and it came
Upwards.
very close around the November of 2024, touching, like slowly starting, like they filled a little bit of that gap, but there's still some gap left between 92 going to 96. That gap is still there.
So that's about that level there.
Yeah.
Interesting how it's trying to hold the 50 moving average on the weekly here. Lots of volume at this level. So if we can push up from this volume, which looks like it's kind of really held on to that level, this could be an interesting play. Potentially, if you think Zoom is going to do well in the future months to come, then maybe this kind of 71 back to the kind of highs most recently set. So I'm trying to get my mouse working. 18%. Yeah, it's nothing.
Yeah.
It's not too bad.
Yeah.
Yeah. Anyway, what's next?
Next up is SMCI. Yes.
SMCI. We've got quite a few tickers flowing now. We're not too sure if we're going to get to all of them, but we will do our best to get to all of them. So yeah, we really appreciate obviously the comments flying in. SMCI. Sorry, I got my words mixed up there. Take it away, Kaye, because I know you like this one.
Yeah, so I think I'm pretty bullish on SMCI. The way that I'm playing SMCI is I'm not playing for swing trading. I'm actually doing a synthetic long on SMCI. So the way synthetic long works is that you buy a call option, but then you sell a put option to basically finance the call option. Because generally when you're selling a call option leaps in 1 year, 2 year time frame, you're pretty much basically the outflow of money is much higher. So basically, there are a couple levels that I'm targeting. Number one is I targeted my first synthetic long was in the 40s, 40 and 41. The next synthetic long that I have targeted is for the 30s. So if it dips to 20s, I will open another synthetic long, for 2027 and beyond. So that's how I'm playing this. I'm not playing for short term here because we don't. It's too volatile of an environment for me to sell buy call options for a short term.
No, I think that's an interesting take there for SMCI. I think for me personally, it's just to break out of this trend line. Nice and simple. But the way that we're going at the moment is I think we've drawn this box from maybe last week or the week before.
Yeah.
But that box is around kind of 24 to 25.50, as you can see in the bottom right here, just above my head. So we can keep trickling down to there, and then perhaps that might be an interesting position for me in my shares. Well, I don't have shares, but 4 shares. That makes sense.
Okay, nice. Next is Snowflake.
Snowflake. I haven't looked at this one for a couple of weeks. Oh, look at that. It's a bit of a bounce. So it did fill that gap that you spoke about.
Yes, but it's I have a trend line which goes from a long time. It still got rejected from that trend line a couple times since the last on 4.2, and then it got rejected on 4.9. My trend line is pretty old. It goes from 2021. So that's the trend line I have. I think the key with Snowflake is going to be how the SaaS industry in general, right? I think it's going to get impacted because of the pullback in customers in spending, because there is uncertainty with the B2B business model. So I'll watch that on the earnings, on whether how long the sales cycle is. Is it continuing? Is the sales cycle getting longer? Number one. Number two, are existing customers willing to spend more dollars on expanding the license base of the current customer? So those are the key ones for me personally, and of course watching the net retention rate for the company here.
And when the earnings reports probably pretty soon.
Earnings should be coming up. Let me see.
I've got it here for Wednesday, 21st of May.
5/22. Yes.
Interesting. I mean, from a technical point of view as well, from the weekly chart, we've got this obviously the lower trend line kind of formed. It's come right back up to there, but maybe that might act as a bit of resistance heading into earnings, perhaps.
Next is go ahead.
Yeah, that's it.
Next is crowd.
Oh, that's a nice weekly candle, isn't it? Weekly bullish engulfing there for crowd. We've seen it on a few stocks. So it looks a lot better on Wednesday for the Mag 7 at least, but a few of them have come back down since. But this is a very nice candle from candle perspectives, because you've got obviously the previous week's price action was between 323 and 344. And then obviously a nice big full candle as well, obviously right back down to that 300 level, straight back up to 377. If you caught it all the way back down there, you're doing very well. It's about 20%, 25% in total. But can it go higher? I like it to go a little bit higher if we can get through this basically 390 level. A bit of resistance here, obviously back in July of last year and again in December of last year. And actually most recently in March of this year. So if we can get through perhaps this zone to the upside, then perhaps we're looking for more upside for CrowdStrike. And I think with all this uncertainty, there's going to be a lot of cybersecurity concerns, I think.
Yeah, also, this is also playing in a range between 340 and 380, 370, however you want to draw it. But that's basically the range it has been operating. And so an ideal candidate for wheel strategy. Yeah.
There you go.
Next is NET, Cloudflare.
See, this tells a different story. This is also obviously cybersecurity, but this looks like it's coming back up to a trend line and rejecting off of that area. So it'd be interesting to see if that can follow in Crowd's footsteps and go a little bit higher. What are your thoughts on this one, Kaye? I spoke a bit about this last one.
So similar, right? It's making a lower highs, and it's below the resistance is 116.01, where it got rejected a lot of times. It was prior resistance as well. And it's slowly the bottom trend line is also slowly trying to creep up. So let's see how that plays out. Let me see the moving averages. We are actually right at the 200-day moving average.
Just right? Kind of reclaimed it almost.
Exactly. When do they report earnings? Let's see.
So I've got them for May the 1st.
Yeah, it's like 2 weeks from now. Might be an earnings play on this one. Not net. All right, I think we'll put this. We'll put this here for the next one.
Question here from Tony: did they already do Tesla? We did do Tesla already. We didn't we, Kaye?
Yes, Tesla we covered in the first, the second ticker.
Yeah, so if you rewatch the stream, obviously either here on X or on YouTube as well, I think it's probably around about half an hour in, perhaps. Just drag the cursor across until you see the Tesla chart. I'm sure you'll find it.
Yeah.
Interesting take on Tesla, wasn't it, a bit earlier on? Anyway.
Next is NVDA, which we already covered during my assessment. So you can probably go back 30 minutes, maybe 30, 35 minutes, you'll see it. And next, the last one is ANET.
Arista Networks.
Yeah.
This is one of your stocks as well. You liked this one, didn't you?
I haven't traded it in a while. I mean, it just fell off the radar for me. But let's see.
It's got an interesting trend line there.
Yeah, it's down 46% from its all-time high. That's crazy. Like, what's going on with ANET? Let me see.
If we do get a bit of a break here, I don't mind just a simple kind of retracement back to the 50 moving average, not necessarily the 20 moving average. So I kind of taken over a bit, but I saw an opportunity. That kind of 20% level, that's a pretty nice trade if we can get through that trend line. The market, the way it goes.
But you will wait for the breakout to occur, right? You will
not. Of course, yeah. I wouldn't get in now. Yeah. That's a good point. Yeah, I'm glad you brought that up because I wouldn't get in now. It's too risky to get in before a break. You get in after the break.
Yeah,
you may lose a few percentages, but it makes it a little bit more solid.
Also, right? Because the resistance will be there at 89 also, right? That was prior resistance, multiple times. So there is a lot of resistance around that level.
Yeah, and that's the line I've just drawn on the screen there for you.
Yeah.
The resistance. Yeah, it's an interesting one. I might have to write that one down. Probably the only one I've written down today, actually.
Okay.
So whoever brought that one up, thank you very much.
We have 2 minutes, so we can probably take AVGO. I mean, I know we have a request for AMC, but do we even people do even trade AMC at this point in time?
We'll fly over it. Why not? So AVGO, obviously. Wow. Okay, this is interesting. We must have drawn that bear flag and we've dropped right down as a consequence. So that obviously played out. That was quite nice. We can get rid of that now. We've got a little bit of resistance here, the 200 moving average. Do you want to talk to
that? Let me see. I sorry, I did not catch that. I was looking at another ticker here.
Getting distracted as always. Yeah, I was just mentioning the fact that
I was like AMC. I was like, what is happening with AMC for a second? Man,
200 moving average.
200 moving average. That's a massive resistance, right? And they are going to report earnings on when 3/6. They reported earnings already. They beat top line, bottom line. Their upcoming earnings will be 3 months from now, 26. I don't follow AVGO. I mean, I know I have traded AVGO. But if somebody who knows it, do they have a bigger exposure to China or not? If yes, then it'll be very interesting to see how this plays out. We might even see rejection here. And if not, and they are immune, there are a couple levels. Like, so the first level is, of course, this level of the 200 to 180, 194. The next level I will target is 198. So if it can break the current level, I would target the 198 to take profits out.
Yeah, and that's the line I've just drawn on the screen
Yeah,
there.
that's
I think I completely agree there with you, actually, because we've got previous resistance here throughout the month of March, and of course the late part of January as support as well. So yeah, believe in the lines. Well, don't believe in them, but look at the lines, acknowledge them, and have it as part of your analysis, definitely, for sure.
Yep. Okay, next.
Yeah, I think it was not AMC, it was AMD. He did this comment here, not AMC, he meant AMD.
I was super excited with AMC. I was like, well, are we going to be rich again with AMC?
No, I don't think so.
Okay.
So I'll talk to my mess that I've got on the screen here. Obviously, a lot of things have happened since we last spoke about it. But all the green lines are gap fills to the upside, and well, actually now that is a gap fill to the upside. Yeah, I mean, loads of gaps to the upside. Are we going to get a bit of a jump in AMD, especially with the news over the weekend? Could it potentially spark something? Because
it still has exposed to China.
Oh, they all do. They all do.
And Brett responded, AVGO has 20% revenue from China. That's pretty big, though.
That is really big. That might be why we're seeing such volatility in that particular asset. You want to talk about AMD too much? Because for me, it's just going to break off this trend line.
Advanced money destroyed, man. I mean, at this point in time, it's in a downtrend. It's been a downtrend since 2024. I am not going to be touching AMD at this point in time. It's just going lower and lower after it keeps getting rejected. Even if you draw a shorter trend line, let's say from November onwards, right? It has not been able to break that trend line. It keeps getting rejected.
What we could see is a bit of an inverse head and shoulders, potentially. So you've got this action here. Maybe we come up to this level and then come back down to 94, which has been previously a good support, even back at the years prior. And then obviously move higher to whatever the market is. That's extremely, what's the word? I can't remember the word, where you kind of hope for things to happen. But it may not happen.
Well, I mean, if you have so much volatility in market in general on the semiconductor space, I don't think it's a great idea to be hoping to trade AMD when it's clearly in a downtrend. And it has failed to break that trend line for a very, very long time. It could happen, but if everything was going great for the market, then you would hope that, hey, a catalyst from earnings report might be able to break it. At this point in time, I don't even know if a catalyst can, change the course for AMD at this, unless the broader situation also settles down.
There's definitely better names in the industry, and we covered one earlier with NVIDIA. Well, not better, but better placed on the charts at least.
Yeah, from a technical standpoint, I mean, at this point in time, you want to see. So, bottom line is, whichever trend line you draw, whether you draw from November, whether you draw from the long term onwards, it has to break that trend line, at least retest and move up. All we are seeing is getting rejected from the trend line and moving lower.
Yeah, and that's the trend is your friend, but in a different way. That makes sense.
Yeah.
If you can't catch a falling knife is the general term on a day trading standpoint. We'll do one more EVGO and then we'll call it a day there. EVGO, this has not been one I've been looking at recently, and I don't know what their revenue is like at the moment. I don't think it's very good.
I can tell you.
But we've got a big gap up here at kind of 571. So if you could fill that, that'd be interesting.
67 million for the last quarter.
Okay. And that move would be over 100%.
Not in this market.
Not in this market, no. It has made moves like that before, though. You can see even just the end of last year from October basically the whole of October was really good.
So where do they operate? Do they operate in United States, or where do they operate?
Yeah, I'm pretty sure they do. Off the top of my head, I'm pretty sure they do.
So they are building charging stations.
Yeah.
Competing with Tesla, basically.
Exactly, and you can see it with ChargePoint as well. ChargePoint's really not doing very well, and they were meant to be one of the bigger players. A few years ago, they were meant to be one of the bigger chargers in the country. They're just not performing. I'm guessing Tesla's kind of taking over that. I don't know too much. I'm not over there infrastructurally, but that's how I kind of perceive the information.
Maybe the audience knows, and because I all I see is Tesla superchargers, and I see some chargers like non-Tesla ones. Does the Rivian network operates out of EVGO? Is EVGO or ChargePoint are also partnering with Rivian and other manufacturers? Because I thought everybody is charging a Tesla supercharger nowadays.
Exactly, that's what it would seem so, especially in the reaction to these particular stocks. EVGO, Blink as well as another one, ChargePoint.
Yeah.
All of their revenue charts and all of their cash holdings do suggest that perhaps Tesla has taken that market by storm.
Yeah, I mean, once Tesla supercharger network is open to all the other non-Tesla cars, it basically took away the market share for these companies.
Exactly right. And we'll end it there. Obviously, thank you very much for all of the tickers that came in. We did run over. Sorry?
No, go for it.
We did run over a little bit on the hour, so we do. Well, I'm getting pretty hungry now. Let's put it that way. So we're going to end it there. Obviously, we did say a little bit earlier. Obviously, the volatility within the market, it's very, very tricky at the moment. So do be careful with your trading. Me personally, I'm taking half sizes, and I'm not going as gung ho for my target prices. So I'm keeping it short, keeping it sharp. Not quite scalping, but kind of somewhere in between, kind of scalping and day trading. So yeah, just be careful with that. Obviously, my word isn't gospel, which is kind of how I'm trading, but I thought I'd share that. Kaye, how are you trading? How are you navigating the markets at the moment?
Well, first of all, thank you to Wolf. We actually crossed 5.1K live watchers on the channel again. Yeah. So thanks to everybody who's watching. Number one. Number two is, rightly said, the sizing is very important, and take profits. Don't swing for the home run. If you are in positive, take those profits out, because in this market is pretty volatile. Because I'm an option seller, I tend to sell options a lot. I am actually closing out my options. If I get a big swing on day one, I close my options and I take my 60% off. I win and I move on. I'm not like trying to get the 100% or 80%. If I get 40% in one day, I'll close my contract, because then I don't know what will happen the next day. Too volatile. So take your profits as much as you can, and sizing is appropriate. Size appropriately based on your risk profile.
Wise words. I'm sure lots of people can take that on board and with their own trading. And with that, obviously, you'll catch us same time next week, 1 p.m. Eastern time on Sunday. And yeah, thank you very much for watching, and we'll see you next week. Take care, everyone.
Take care. Stay safe.